Let's take a look at those GDP numbers which came out yesterday, coming in at 2.7%, much better than expected for the second quarter by some economists. Did those numbers come in line with your expectations?
Good morning. No, those numbers weren't actually in line with our expectations. We had actually expected a lower number at 2.4%, but came in at 2.7%, which was a bit surprising. However, even though it came in slightly lower, it was a particularly slow start to the year, given the fact that the final quarter of last year's numbers came in at 3.2%. So it's going to be quite a tough year ahead, even though those numbers were slightly higher than our current projections.
A tough year ahead, like you say, but what kind of numbers can we expect going forward? Perhaps in the second quarter, we did have the Reserve Bank saying they are pretty cautious about the situation in Europe currently.
Yes, we're pretty much in line with what the Reserve Bank is thinking. We do see that the second and third quarters of this year could be slightly more challenging than the first quarter. So we are expecting a GDP growth more or less in line with about 2.8% for this year and possibly even lower in 2013. What was pretty interesting was the fact that the mining sector contributed, well, rather subtracted 0.9 percentage points from the overall GDP number. And had we not seen such negative growth of 16.8% in the first quarter, we could possibly have seen GDP growth come in slightly higher at about 3.6% rather than the current 2.7% that we did see. So it's going to be challenging during the course of this year.
You touch on mining, with manufacturing also is surprising to the upside. What did you make of that growth within the manufacturing sector?
Well, the manufacturing sector's growth was particularly surprising. It came in at 7.7% quarter on quarter from the 4.2% that we saw in the previous quarter and contributed about 1.2 percentage points to the first quarter's GDP growth. We do, however, believe that the growth has largely been emanating from external demands over the past couple of quarters, but it's not likely to continue over the next few quarters. We are seeing lower demand coming through from the Eurozone, from China as well, so that could possibly pressure manufacturing growth going forward. And if you look at what the PMI is indicating, it's also indicating pressures going forward. So the manufacturing sector is not likely to contribute robustly as it has been over the remainder of this year and into 2013.
Thanks, Ruth. Let's touch on those private sector credit extension numbers, slowing quite considerably, sitting at 7.33% to 7.33% in April from 9.16% in March. Did you expect such a big slowdown?
No, not at all. We had expected an easing to about 9.07%. So that easing to 7.3% was very surprising to us. We did, however, see that the drivers of that was a slowdown in mortgage advances, installment sales, and other loans and advances. And we're not likely to see very robust growth coming from those components as well. If you consider what the current state of the property market is, it's not likely that we're going to see mortgage advances grow considerably during the course of this year. Having said that, however, the current interest rate environment is supportive of private sector credit extension going forward. But what came out of the numbers was the fact that demand from corporates is also starting to ease. We saw corporate credit demand slow to about 7.5% from 11.9%, which is an indication that domestic demand conditions are starting to slow and that could be a major force going forward.
Let's touch on the rand a bit, Shireen. What kind of trading ranges are you expecting to come through today? We are seeing the rand sitting at 8.37 against the dollar at this stage.
Well, having just seen those credit numbers, we didn't really expect that number to really impact the currency movements. We are seeing the rand remaining wedded to international developments, and particularly those coming out of the Eurozone. So we're seeing a very tight trading range today, probably in the region of about 8.28 to 8.38, but it could possibly go as high as 8.40 if conditions in the Eurozone are more adverse than what it currently is playing at the moment.